Today for Dukascopy TV, we're going to take a look at the 11 macro sectors to the S&P and determine what each one of those 11 are saying from a chart perspective to help better allocate your money across this major equity index. Stay tuned. We're going to go through the 11 sectors. The tickers, we'll go through them alphabetically. XLB Materials. This made its all-time high in the first quarter of 2018. You can see that this year we've kind of run into resistance even recently up against the same downtrend line. We're essentially in the middle of the downtrend line and the uptrend line that we have from the Christmas low. Right here, right now, not much to really discern. Notice, and you'll see this on lots of the charts, the MACD indicator is about to cross over negatively to get somewhat more of a bearish implication here. But specifically in materials, I'd say we're middle of the pack, and it's not in a position that right now really is material to discerning what to do next. Communications, XLC, this has limited price history because it was just developed in 2018. Notice, however, the sequential highs that were here on aggressive sequential and again in July on standard sequential. Recently we did a set of 9 count, pretty much just at the same levels, and we've pulled back. You can see the 2 trend lines from the Christmas low. One has already been broken. If we draw the second one, we're close to playing with it. Today is a setup -7 count. If we get to a -9 in the next couple of days, which is likely, this may have a near-term bottom. You've got to watch out if this breaks under 47.5 or so. Then it opens the door for a much more substantial decline all the way down to 43. This needs to break out above the highs where we have the horizontal blue line. Let's call it somewhere around 51.5. We've got to take out the highs to get a shot for 53.5 to 54.25. Energy. Energy had a beginning of September that was excellent. It's pared back from then, part of that because oil's also given back almost all the $5 to $6 it had gained from 2 Sundays ago on the Saudi oil attack. And what we see is that the highs so far went right to a propulsion exhaustion level. We redrew the trend line and then to take that high from the fourth quarter 2018 high. But as I mentioned here, this is not even close to the all-time highs. This purple line here comes in from all-time highs. They were made back, I think it was 2014. So oil's kind of hanging in there. Energy stocks, for the first time this year, at the beginning of September, we told clients that we were finally getting interested in them. And the best thing I can say about the energy sector at this point is it's my belief between now and the end of this year, energy will at least hold its own versus the S&P, something it's not been able to do for the bulk of the year. It's one of the worst underperformers of the year. Only healthcare is worse than it. But I do think, given what's gone on in the Mideast, and the potential for more difficult problems there will be a minor bid to the names. And because they had gotten so cheap, I think you're going to see that XLE will hold its own against, in other words, be an equal weight against the S&P through year's end. Next, we'll take a look at financials. Financials also, so we have redrawn the uptrend line. Because it had broken from the Christmas low in May. We've redrawn it to the summertime low. Notice that the recent high just a week and a half ago or so stopped on the same trend line that we had drawn from all-time highs back in first quarter of 2000. So they are in the midst of a propulsion signal that still suggests that the XLF can get as high as 29.25 as an initial type of target. On the downside here, look for support around 27.25. Also, notice in this area that I'm circling here is really a full island reversal type pattern. You don't want to see this gap down again. So until it does that, there's still a minor positive bias here. And if we blow this up a little bit in the next couple days, okay, we're on a 5 count down. There's potentially some support actually where we are right now. These look like they're doing better than some others. Keep an eye on whether or not MACD actually crosses and the degree to which it crosses, because sometimes you get just little minor turns, kind of like what we saw in July, not real breakdowns. And right now, this would still indicate there's a potential here for financials to jump to the upside. Industrials are next. Industrials also peaked out just recently at the downtrend line from all-time highs. The same type pattern you're seeing here. This all-time high was made in the first quarter of 2018. We attached it to that line from the September high of last year, and notice that we ran out of steam this year right there. We're still well above the Christmas low. There was a sequential 13 bottom here in looks like late July or mid-August. Look for some support at just about 76.25. This is also in the midst of a still an active propulsion buy signal. Target is 81.43 on the upside. Don't want to see it take out 74.18 or so. That's the TDST line, and that would also be beneath the trend line. So look for that to hold as support. Otherwise, the gain changes there. Here's technology, and same type thing. Recently, we peaked, and here, let me draw the trend line. I hadn't done this one, and it's really important because notice that even today we bounced again. Look at this on the uptrend line from the Christmas low. So it's really important short term that we hold that uptrend line. So even though we kind of have a double top this year, north of 82 in XLK, the trend line's holding. Now, if the trend line breaks, you're going to see several people run to the exits. As far as I'm concerned, I mean, that's one cautionary place to potentially lighten up. But the real game changes if we can get underneath 76.48 or 76.46 on multiple closes. That's the place in which you're going to see much more substantial selling come in, because that's where the cloud model would break for the first time since the Christmas low was made. So not only do you want to pay attention to this trend line, which again has multiple points on it and we bounced off of today, but more importantly for the bigger picture for technology, 76.46 is the level it truly needs to hold. Staples are going to be one of your better charts, made all-time highs earlier in September. You can see right here, that's an all-time high. We're still staying above the trend line from the Christmas bottom. A couple days ago, made a setup 9 count and have bounced. What you want to see is this is also in an active, no, actually it's not in an active sequential propulsion buy. There are no current signals. So other than the short-term support here, you want to stay above the trend line, and ideally you really want to see this recent 9 count hold on the bottom. If this turns around and makes new all-time highs, look for something near 63, where is this, 63.95-ish or so. I'm sorry, 63.70 in order to find resistance. Next up, real estate. Also, it's been having a very solid year. Peaked at the beginning of September, has pulled back a bit as rates have also flipped. You know, the U.S. 10-year has moved from 1.45, got it up to 1.9, probably trading around 1.65, 1.7 right now. Staying above 38.89 in a proper format, in a qualified and confirmed format. If you're not sure what that is, to help determine a breakdown, go to our website. You'll see what qualified and confirmed breakdowns are. Basically, you want to see this trend line hold. Look for support at 37.65. If that breaks, then you could get a more substantial break all the way down to 35.18. But clearly one of the better sectors. Utilities also going to have a nice picture. Yesterday made all-time highs. Does have a setup 9 count. That means we have a 9-13 9 count. That is a textbook pattern. Expect some type of pause here. Doesn't have to be a meaningful one, but we would need to move substantially. I'd say, here, let me say, let's put propulsion up for a second so we can see if we get a sense of where some upside targets are. All right, so 65.19 and 68.33 are upside targets. If we broke underneath the TDST line at 62.21, then look for further weakness to get to this second uptrend line from the Christmas low. Healthcare, the worst performing sector this year. I've added on this one a 200-day moving average simply to show you that this is smack going nowhere fast. It has not partaken in the market's up move the way the rest of the market has, and certainly the S&P in totality has this year. Here are the trend lines to look at off of the Christmas low. The lower of the two comes in somewhere around 89.40ish, give or take right now. If we put up propulsion currently has us in sell mode, looking for a move down to 86.77. We would properly, again, qualified and confirmed, need to properly get above 91.64 in order to make this a more bullish story. If that happens the right way, we target 95.10. Lastly, consumer discretionary names. These are all-time highs that we've seen just even 2 weeks ago, or close to them. We essentially tested the July highs. July highs were on a 13.9 count. We were actually long for clients at 113. We kicked it out at 124. We've kind of been out of it since. Notice that today's low even got to the propulsion exhaustion level and bounced. Today's a set of 8 counts. So unless they demolish things tomorrow, this has a chance for a short-term bottom also. One thing I don't like is that you've got a much lower high in the MACD count. It is in negative mode. So be careful if this trend line breaks somewhere around 117.5 or so. That opens the door for a move of a few percent down to 113.40. And if we pull up a weekly chart, I'd say 113.40 to 111.40 would be those downside targets. So that's a quick look at the 11 macro sectors. I'm Rick Bensignor for Dukascopy TV. Have a good week.